Welcome back. You're with us here on this market special. Are we there yet is the bigger, broader question, which Ramdevji sort of gave excellent nuanced responses to. But, you know, what we're going to do now from here on is get sort of individual sector specialists. So our first guest on the show is Navneet Munot, MD and CEO at HDFC AMC. Navneet, welcome to the program. Thank you very much. And you've been listening in keenly to the conversation with Ramdevji here. So Ramdevji, go ahead. I mean, Navneet, all yours.
Hi Navneet, how are you?
Hi, good. Ramdevji, I would have preferred it the other way around, me asking questions to you. But good to see you in this avatar as markets editor on CNBC.
Yeah. So, you know, the biggest question in my mind and biggest opportunity I see in the market is the relentless market expansion in last 5 years, where demat accounts went from 40 million to 190 million as of last month. And my sense is it is going to go from 190 million to maybe 300, 400 millions in years to come. Now, this has led to market expansion of unprecedented fashion in last, say, 4-5 years. I mean, we have seen expansion in the last 25 years also. But the pace of last 5 years is very different. My sense is this is a change environment and change opportunity for capital markets in India, not only for last 5 years, but next 5 to 10 years. What's your view on that?
No, absolutely, Ramdevji. And I was seeing the headline behind market mayhem, and just behind Prashant, I saw a very big screen saying market mayhem, and takes me back in time 5 years. So Nifty touched an all-time high of 12,000 in February 20, and within few weeks we were down to 7,500 or so. And it looked like an end of the world. I mean, the demand and supply shock we saw in that year, and then 21 was the second wave, 22 was Russia-Ukraine war, inflation and interest rates in the developed markets touching new highs, so on and so forth. And despite all of that, I think markets have done very well. Of course, a year back, everybody was saying, all of us, Ramdevji, we were discussing that looking at the valuations, a correction is imminent. And we have seen that in last 4 or 5 months. Variety of reasons have led to that. But I think as valuations correct, the structural story hasn't really changed. And coming to your point on the financialization of savings, I maintain that we are at the early stage of financialization of savings in India. This nation is transforming from a nation of savers to a nation of investors, transforming from a nation of savers to a nation of investors, and we have a long way to go. Of course, there would be some cycles. Flows would slow down a bit, given the way markets have been over the last few months. We might see some cyclical slowdown, even as you were talking about the new demat accounts, trading activity, volumes, etc. But the structural trend of investors putting more money for long-term investing in a disciplined manner, I think that will continue for a very, very long time to come.
Navneet, one other thing which has happened is that I was hearing Jeff Bezos. He was asked why America is great for the stock market. So he said the highest amount of risk capital flow is in US. My sense is after 70 years or 75 years of independence, now probably India has the second largest risk capital flow, and truly risk capital, the risk which is distributed, not the institutional risk, but the retail risk. Retail risk distributed kind of capital is flowing into the country relentlessly after a long time. Do you think it will have long-term repercussion, and in what shape it is going to change the trajectory of the development of the country? Forget about stock market only.
No, absolutely. It is very critical that a country which has such high savings rate also invest that money for long-term capital formation. So long-term capital formation is very critical to achieve our mission of Viksit Bharat by 2047, and I think we are moving in that direction. As you are aware, few days back in MP, we launched this minimum ticket size of SIP of 250 rupees, a choti SIP. We call this a Jan Nivesh movement. So Jan Dhan Yojana was a very, very big movement 10 years back when more than 500 million bank accounts got opened. I think over the next several years, we are going to see something similar on the Jan Nivesh side. And while, of course, I mean, flows course, will have some cyclical component to it. But I think there is a large part of it is very structural in nature. And you are absolutely right. We are going to see like billions of dollars coming in from domestic investors in the form of risk capital, which will aid to the economic growth of the country. And this is very, very critical. A lot of people ask me, have we become Atmanirbhar in our investments, and can domestic investors only lead the market? Or we need both. We need foreign investors, we need domestic investors. We will need a lot of capital to meet our investment needs over the next several decades. And I feel very positive that domestic investors have surely taken the lead, and at some stage we are going to see foreign investors coming back to the market.
Oh, absolutely, and I hope sooner rather than later. Ramdeji, with your permission, just one question to Navneet. Navneet, just a hypothesis, right? And it's yours to respond to. We have an explosion, as Ramdeji was pointing about, 19 crore demat accounts, etc. The returns from 2019 to the top in 2024 were extraordinary. So the long-term 25-year return is about 12-13%. But in this period, 2019 to 24, it ran upwards of 22, 23, 25%. I have the exact numbers here. So one can argue that those are the returns, extraordinary returns, excess returns, if I can use that term, is what got this huge flow of retail investors who would not otherwise have come into the market. So if that excess return now goes back and we go back to that normalized kind of return, 12, 13, 14%, will, and I hope they do, will retail investors stay in the market? And are you already seeing any evidence to support this or sort of counter this? Go on.
No, maybe there could be a part of market where the expectations were very high, but our communication from asset management industry has been to keep moderate expectations. And when valuations are high, of course, we are borrowing from the future returns. And that is what our fund managers were communicating a year back, particularly in segments of the market where there was froth emerging. And with this correction, at some point in time, as valuations correct, I think the long-term investors will not be disappointed investing in India. I can just give you one number that my sense is the numbers that I look at, the February SIP number would be higher than February 25 SIP number would be higher than February 24 a year later, despite 5 or 6 months of severe correction in the market and tremendous volatility in the market. My sense as of now is that even the net flows are likely to be higher. SIP flows could be substantially higher than where they were a year back. And this is very important to know that over the last 5 or 6 months, investors have seen a lot of volatility, but a good number of them are still keeping resilience and continue to invest with a long-term view.
That's good to hear. Ramdeji, same question to you.
What is that?
The excess return, bringing excess investors in that sense.
Yeah.
Right? The jump has been phenomenal.
Yes, clearly.
But they were there for the excess.
Yeah, it's a good question. But, if you see the longer term return, it's about 12 to 14%. Even today, if you see don't go deeper into the index. If you look at just the Nifty is 97% up 5 years on. If you look at 5 years exit, it was just about pre-COVID. February 20th or something, it was all-time high at that point of time. From there, index is up 95, 96%. So it's running that 14, 15%. It's not that very excessive, but yes, in between from that 8,500, it looked very good.
Correct.
It was almost like a 3x in 4-5 years. So it was extraordinary return. And that must have also attracted some more confident flow into the market. But, you have to also look at from the fixed income point of view. What are they moving from? They are moving from 5% to 15%, or maybe 5% to 12, 30%. So at 5%, it takes 15 years to double. At 13, 14%, it takes maybe 5.5 or 6 years to double. So that equation, now people have understood. And this mutual fund, sahi hai. I think the campaign is so good. I was saying yesterday in the cricket that mutual fund, now they're talking about the guys are getting scared, so they're addressing to that problem also. That you must remain invested. Don't break it now. This is the time you got to bring confidence and patience in your SIP investing thought process. So I think as an industry, apart from digital infrastructure, even the campaigning and hand-holding digitally is happening big way. And I think we are underinvested as a country into the equities, because your country will be built by your equities. And if you don't keep supplying that equity, it is not going to work out. So clearly, what you are saying as the earnings the returns slow down. There will be slowdown in demat accumulation, and there will be slowdown somewhat in the flow also. But that will be very temporary, because as the bottom is hit, again that same journey will start.
And as Navneet said, I mean, I think you can also attest that point that Feb 25 SIP flows actually are higher. Even net flows perhaps will be higher, even though 5 months now the market has not done anything, it's gone down. So
those things happen in the sense that it cannot happen that on the top of the market your flow, number of demats will be at top. In fact, that top flow and top demat actually takes the market to the higher level. And as the market corrects, those things also slow down. But then journey is very long. That is the faith we have, that it is headed for 300, 400 million demat accounts and relentless expansion of the equity market deeper into the... I think today NSE chief has said that there is hardly 10 or 15 pin codes where there is no investor. But at least there are 15 pin codes still left where there is no investor. So there is still a lot to happen.
You know, I just want to introduce Ramesh of Lupin as well. Ramesh, welcome to the program. And as you were listening into this conversation, you know, we're just coming to you and we want to understand what's happening in the farmer space as well. Ramdeep, it's your question. Navneet, if you want to wrap up with another question. Capital markets as a space, as a business has been one of your favorites. Over the years we've spoken about it. Please.
So Navneet, how do you see the AUM, which is about, say, 40 lakhs in equity, maybe 68, 70 lakhs overall AUM for the mutual fund industry? I'm more on top of the equity part of it. Equity part grows two ways, mark to market and flow. So in recent times, it has grown at more than 25% types, like maybe 22, 23% compounded AUM growth must have happened. So how do you see industry from, say, current 40 lakhs in next 10 years out? Do you see it going to 300 to 400 lakh crores equity? And hence, all the associated industries, whether depositories, whether it is exchanges, brokers, everybody will thrive with that.
So one, Ramdev, in last couple of months, investors have clearly realized that professional fund managers have done better than what has happened to their own portfolios. The correction that has happened in many stocks which were chased by individual investors versus the fall in NAV, I mean, you can see the stark difference. And structurally, over the next 10 years or 20 years, I've always give an example of, you can go back and see the asset management industry, the size of it in 1980s in the United States, and from couple of $1 billion, they've all reached trillions of dollars. In next 20, 30 years, as we move from 4 trillion to 30, 40 trillion dollars, I think you will see the assets of asset managers like us growing in that direction.
Should we wrap up? All right, Navneet, thank you very much for joining us and shedding light on. By the way, if I can, Navneet, both of you also run AMCs. I mean, obviously you run AMCs and you do more. But as investors, Ramdevji, in the capital market space, what is the, from a long term, I'm not asking for recommendation or anything, what is which piece of the capital market chain is the most sticky, most durable to play this longer upswing?
I think it is not like in lending, you need capital to lend, and the stress comes through your balance sheet. In asset management, it's a very asset light. It's more intellectually driven. So
it's non-linear. The growth is non-linear.
It is exponential. The cash flow is very exponential. So whether it is asset management, whether it is private equity, whether it is broking, wealth management, they're all extremely asset light. So when you have 300, 400 lakh crores, see if you look at 10 years out, 300, 400 lakh crores of asset management, at least 50% will be private equity, another one. So another 100, 150 lakh crores of private equity. Then you are talking about wealth management, which will be multiple of all this, because all the asset classes will converge in wealth management. So that will be running into maybe another 400, 500 lakh crores. So the opportunity size for anywhere, and then the company has to be good at what they're doing. See, like Navneet's company is fantastic asset management company. So, I mean, if you want to buy into, so you have to buy little all over. Even the, so there are 6, 7, 8 segments in capital
market space.
Yeah. And they're highly, I mean, exchanges ultimately, you know, where, I mean, it's a monopoly and these beasts, they live for very long. So it's a very longevity opportunity. A lot of these other industrial companies and all, they are maybe 3 years opportunity, 5-year window. But these are monopolistic and they're 20, 30, 40, maybe 100-year window. So your multiples will be different, altogether different.
And valuations are reasonable now in this space?
Yes.
I mean, for AMCs, you
selectively, yes. Yes,
Selectively,
currently
yes.
they have corrected.
I
Yes.
think, Navneet, that's a hint to HDFC AMC, although we're not doing stock recommendations
I
here.
will only say
Navneet,
that we meet a very important need of the society. On one side, capital formation for the growth of the economy, and a second side, making the
absolutely.
growth highly inclusive, ensuring that the fruit reaches every household in India. So, I mean, we play a very important and a critical role in meeting the Prime Minister's objective or Prime Minister's mission of Viksit Bharat in 2047.
All right.
I take pride in that.
Lovely conversation, Navneet, and I hope sort of markets are somewhere close to the end of this sell-off sooner rather than later. But anyway, I mean, you know, it cycles, as Ramdevji said. After a few years of very, very good markets.
I'll just quote one because Prashant Howard Marks is coming to India, and I just got reminded one of his quote. I don't know when will this market bottom. I don't know stocks, how much downside they have. But I remember one quote of him that when the knife stops falling, when the dust settles, when there is absolute clarity on the horizon, there won't be bargains left.
Good, you know,
Very good. Very apt.
Absolutely,
Very apt.
very, very apt.
That's what I was saying.
On that fantastic note, Navneet, we'll thank you. Thank you very much for being part of this program, and
Thank you.
we'll have you back soon again. Ramdev, of course, is our